Welcome everyone. I am here with my very good friend Eryka Gemma. Eryka, please say hello, introduce yourself.
Hi everybody, I'm Eryka Gemma. I am CEO of blockchaincenter.com and co-founder of Bitcoin Center Miami. We are an education hub located in downtown Miami, really trying to educate the masses when it comes to digital currencies, specifically Bitcoin, because we do see it as the future of money.
Perfect. So today what we're going to be talking about is the Fidelity Investment Thesis that recently came out and kind of breaking down some of the things that were involved in that. And I have a few questions. So straight off the bat, maybe just explain to the listeners what this thesis was and why it's so important.
So Fidelity Investment Thesis was written in July of 2020. It's about a, let's say, 8-page document, and it talks about Bitcoin as a store of value, as its growth potential, and the reasons why, essentially. What's interesting about this is that many people don't know, but Fidelity has been mining Bitcoin since 2013. They manage over $800 billion. And when you see a big name like this be very bullish on an asset that used to be the fringe, it makes you understand and know that it's really not the fringe anymore.
Well, even at 2013, that's really early movers advantage. Like that's not late to the party. That's not even coming in midway. 2013 for Bitcoin is actually really early.
Yeah, and they were mining Bitcoin. It wasn't even like they were buying it on the markets. They were invested in the longevity of Bitcoin.
Okay, so let's talk about the thesis itself. So talk about the slow and steady inflation that they describe in the report.
Yeah, one thing that people don't understand about Bitcoin versus gold is Bitcoin does have this slow and steady inflation rate, meaning that we know how much Bitcoin is being added to the market, almost even down to the hour.
Yeah.
And that's because that's how miners work. And you know that every 10 minutes, there's roughly right now about 3.25 Bitcoins being added to the economy. We know that, the last block size was 6.5 Bitcoins being added to the economy. So that's very different when it comes to gold, because we don't know when new gold is going to be found. Mm-hmm. We also don't know when, let's say that an asteroid that has a lot of gold is found or it hits the earth. We don't know. Those are just circumstances that are out of our hands. Mm-hmm. But with Bitcoin, because it is software code, we know almost exactly down to the 10-minute mark when these new blocks are going to be added. Mm-hmm. We actually even know which mining pool won them. And this slow and steady inflation rate is something that we've never seen before, because let's say in comparison to fiat, we don't know how much money the Federal Reserve is going to decide to print tomorrow.
Very true. And so talk to me about the 24-hour market and what it describes in the report for those.
Yeah, so 24/7 markets are really a pure market, and to my understanding, there's nothing like that exists in the modern world. I mean, you have, after 9/11 happened, they had to close down the markets for a couple days. After your 9 to 5 bankers hours, whenever the stock market closes, it's over. This is interesting too when it comes to Bitcoin, because Bitcoin since 2018 has had, really December 2017, has had Bitcoin futures exchanged. And you'll see that every time the market closes, there's a gap in the Bitcoin price now because of that. And you'll see Bitcoin have to come back every single time and fill that gap that is created because the market's closed. What's cool also about this 24/7 market is you'll see friends of mine who are like, I love trading when China's awake and China's trading Bitcoin, because they feel like they can read what's happening with them better than they can US people. So this 24/7 settlement time, you're no longer restricted to the 9 to 5 bankers hours. It's your own money in your bank account, and you want to send it on the weekend, but you can't because your bank won't let you, and your wire transfers are closed. So this pure 24/7 market is really a bullish signal for Bitcoin, because there's just nothing else like it.
Okay, so I want to discuss the market cap, because the market cap for Bitcoin and the market cap for some other big things like, for example, gold or investment, New York Stock Exchange, there's quite a big difference between these things. So I'm hoping you can kind of shed a little bit of light on them for us.
Yeah, so right now the market cap of Bitcoin is about $300 billion roughly. Now, what's interesting about that is such a small number. I mean, Fidelity itself manages more than the entire market cap of Bitcoin. Apple's the first company to hit $1 trillion. They are one company, and while everybody does use their technology, it's not a global money system like Bitcoin is. So when you see the upside of Bitcoin based on its market cap alone, the potential of it is incredible. So when you see, like, for example, in Fidelity's investment thesis, they follow a stock to flow model, which I'm sure we'll talk about. But when you see them predicting that Bitcoin will be $1 million eventually, you see that that's not too outlandish when at a $16,000 Bitcoin, the market cap is only $300,000. And I love, one of my favorite math problems to show people is that the gold market cap is currently at about 8 trillion. Now, the Bitcoin market cap is at 300 billion. Now, $16,000, 300 billion market cap. If Bitcoin were to go to $100,000, 9 times increase from where we are now, the market cap at that point would only be $2 trillion, which is still only 1/4 of the gold market cap. And this is a digital gold.
Exactly. And I mean, a 9 times increase for Bitcoin is not unheard of. Look at the increases that we've had in the last 10 years. So it's not unreasonable to expect something like that. So, okay, so I do want to talk about the stock and flow model, and I know we're running out of time here. So maybe just explain to people what it is and why it's also important.
Yeah, so the stock to flow model relates to the slow and steady inflation rate of Bitcoin. So because we know that with miners, there is a rule that every about 4 years, they reduce the mining reward by half. So we recently had a halving, is what we call it, in the Bitcoin space, where it was reduced from 6.25 Bitcoins to about 3.5 Bitcoin is the reward you get if you solve the math problem the quickest. Now, what that does is that just really supply and demand. So every time after a halving happens, you see a huge uptick in Bitcoin price simply because of supply and demand. And that is that stock to flow model explained easily.
Okay, perfect. Well, I mean, I took a very quick look at this and I just wanted to get your opinion on this thesis because I did see a lot of interesting things. So thank you, Eryka, for kind of breaking down all of this stuff. If people want to get more information, where can we send them?
So you can go to my website, bankoferyka, ERYKA.com, or you can go to blockchaincenter.com and we can definitely support you if you have questions about onboarding into the Bitcoin ecosystem.
Perfect. Thanks so much.